I don't subscribe to the recession story. Trump has been very consistent in terms of criticising the Fed and wanting lower rates. Yes, the Fed increased rates, as we know, 9 times from the end of 15 through to the back end of last year. But, that was against the backdrop of a tightening labour market and improving macro fundamentals. So in actual fact, I think there's a little bit of a paradox with what Trump's saying in terms of wanting further aggressive easing. Yes, the Fed will likely ease again after going in July, whatever. We've probably got 2 or 3 more cuts, lined up. But to try and talk about the need for a more significant level of easing in the US economy against the backdrop of an unemployment rate that's still at the 50-year low, or around the 50-year low, makes very little sense. But I think what is clear is the fact that monetary policy with the Fed and with other central banks around the world is starting to lose momentum. And that critical pivot from monetary to fiscal policy, which many people will start to look for, is probably still some way off. So the risks are rising, and Trump is probably right to address some of those.
So we've seen this big flight of capital out of equities into bonds, some saying that's been overdone in this environment. And as you point out, look, while we might be at peak cycle, there is still opportunities out there. Yep. What would you like to hear from policymakers out of Jackson Hole? Perhaps a more dovish bias being confirmed when it comes to global rates? I think
we need a dovish bias, but we need a reiteration of the data dependency. And Powell's been fairly consistent, and his predecessors as well, in terms of the data dependent nature. And that's what central bankers should be. They should be data dependent in terms of setting policy against the backdrop of gyrating fundamentals. So we need to get more confirmation of underlying awareness of the challenges, but also acknowledgement that it's not necessarily on the cliff edge as far as the US economy and that recession fear is concerned.
Simon Ballard has a question for you.
Yeah, hi Simon. Well, on that point, with respect to clarity, we of course have had the inversion of that 2-10 yield curve just in the last week or so. We've seen the spread now widen a little bit, and we're no longer inverted. But when you say that you don't subscribe to a recession, what could be a catalyst though that does push the global economy into recession?
Well, I think one of the key things that obviously everybody's watching is the US-China trade situation. And if that did deteriorate, significantly, if tariffs were to be increased and hiked, dramatically by Mr. Trump, then again, that would slow global growth even more than we've already addressed our forecasts, or in our forecasts, I should say, for global growth later this year and into next year. But for the time being, as I say, the underlying fundamentals, the ability and the agility of central banks to manoeuvre, albeit, as I said to Dan, declining monetary policy potential is still there. So that should help to sort of appease the immediate recession risks. And that's why I believe that inverted 2-10 curve was wrong. We've re-steepened a little bit. We've been arguing all along that that flattening curve should normalise, stabilise at some point, which hopefully we're going to start seeing. But this is a very fragile market at this point.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.